Hi there, I'm Champion Trader Kevin Davey, and today I'm going to take a strategy I found on the internet and see, is this strategy any good? So let's get started. Before we get started, if you're not on my free email list for algo trading information, well, you should be. Just hit the QR code, type in the address you see on the screen, and you'll get signed up and you'll get this free mini S&P algo strategy. So I found a strategy online. It doesn't really matter where it's from or who did it. I'm not trying to raise this person up and say this is the greatest strategy developer ever, and I'm not trying to say this is the worst strategy developer ever. I'm going to keep that person anonymous. You might be able to figure it out. Great if you do, but it doesn't really matter. That isn't the point of the video. The point of the video is more to find something and then to test it and see if you agree or disagree. I always say that's the most important part of strategy development, is testing yourself. So a million people could tell you something is great. Until you test it and verify it for yourself, you really don't know. So even with my video here, feel free to take what I've done, replicate it, and see if you agree and see if you get the same results. That's really important. It helps build up your confidence in your strategy building when you can see the results you created, because you're the one trading. I'm not trading for you. The person who originally created this strategy isn't trading for you. So you've got to make sure you feel confident in whatever it is you're testing and whatever you're trading. Okay? So I wanted to answer 3 questions with this particular strategy I found. 1, can I duplicate the results that the person showed? 2, are the results actually any good, regardless of what the person said in the video? And 3, can I make what I would consider a viable strategy from either the concept or the exact strategy? Can I find something good out of this? And so that's what I'm going to look at here. So here's a screenshot of what that person showed. It was a YouTube video. What they showed as far as performance of this strategy. This is EMD, which is the mid-cap stock index. I'll talk a little bit about that later because this isn't really a common one. But there's the equity curve this person showed. Hey, you'd look at that, and if you knew nothing else, you would think that looks pretty good. So I'm going to first try to replicate it. Second, I'm going to say if it's any good. And then third, I'm going to try to make a version that I'd feel comfortable trading. So here's the code that the person showed. This is TradeStation code. It's a pretty simple strategy, so thumbs up for that. I love simple strategies without a lot of convoluted rules. This person, I like the napkin test, and this person did that. What the napkin test is a cocktail. Take a cocktail napkin that you'd get like at a bar, and it's small. And if you could write down the rules for a strategy on that napkin, that probably means it's simple enough to be worthwhile. You don't want something that's 100 pages of code. So this one fits that. So that's kind of nice. And again, it's just a strategy I found online, and it only goes long. I don't really like that, but hey, let's see how it looks, okay? Well, if you like what you see so far, you're going to love my free algo strategy and more trading information. Just hit the QR code or type in the address you see, and you'll get signed up to my email list and get lots of free algo trading information. So first, I coded this up in TradeStation, and here are the results up in this window. And I just bring that over. And there it is. And it looks pretty similar to what that person did, but not quite. You know, he had about 60, or she had about $60,000 in, I think, 500 trades. I'm only getting about 50,000. So I'm like, yeah, I sort of get it, but not exactly. So I realized probably what's going on is what they showed in their code isn't exactly what they tested. So let's go back to their code, and you see they had one input that was what they call breakout points, and they had a value of 7. So I suspected that, hey, they might have optimized that value and shown some different results. And so that's what I did in the next chart. And lo and behold, look at that. 60,000 profit. The curve looks similar. This is actually almost identical to the results that person did. So I'm able to match it. What it is, it's an optimized backtest now, which you got to kind of worry about a little bit. But at least I was able to duplicate that person's results. That's pretty cool. And like I said, that's the first step in this whole process. So to answer the question, can I duplicate the results? Yes, I was able to after optimizing it. So that makes me feel pretty good that, hey, at least I can duplicate what this person is doing. Now, the next question, are the results any good? Okay, so let's take a look. Now, this person ran it for, I think it was like 4 or 5 years. Basically, the area that I show here, that was that back test. Okay, so one of the things that I like doing is run it before that original test, just see how it did. Maybe it was terrible before and it just happened to be good on a certain starting date. I don't know. It's worth looking at. And then I also want to look since it went live, because that, if you saw the original chart, it was from the end of 2023 roughly, and now we're in 2025, so we have a year plus of real-time data. So let's see what it did since that point. So first, I do the before test. It doesn't look that great, and where the results shown in that video, we're almost at the exact bottom here. So it was a pretty good time to start. Okay, so that kind of scares me a little bit. But what scares me more probably is the live test. And you can see since it went live originally, right at the beginning, it went up for a while, but then it kind of collapsed and kind of went down. So since that strategy went live, not so good. So overall, what would I say about this? I'd probably say this is not that good of a strategy just by itself, okay? Because one, it didn't look so good before the test, and two, definitely more importantly, since that video was released, doesn't look good either. Okay. All right. Well, hey, we tested it. Now we know. Okay. So what you thought was really good a few slides ago with that nice looking back test doesn't really look that nice. There's one other thing that kind of concerned me with this particular strategy. There were actually two things that kind of concerned me with this strategy. And the first one was, how does it compare to a buy and hold? So let's take a look at the buy and hold. And you see, oh, there's no trades. That's because there's only one trade. It buys at the beginning, sells at the end. So you got to look at the detailed equity curve. And here's what it looks like. The buy and hold curve does not look good. So definitely our strategy looks better than that. But that's a good comparison for stock indices to look at buy and hold and see how it's different. The second concern I have with this strategy is that it's trading the EMD. And probably before this video, you might never have heard of the EMD futures market. That's because not a lot of people trade it. And my experience with it is you have a lot of slippage. You just get some bad fills with it. So the trading costs are higher for this. And when I saw that original equity curve from the video, I kind of wondered, hey, does this include slippage and commission? Well, when you put in what I consider the proper amount of slippage and commission, this is what you get. So it goes from that nice upward equity curve to a pretty poor one. And even if you were to look at just when the video was produced, it still doesn't look that great. Okay. Obviously, it's fallen off as we showed before, but adding in slippage and commission, that's a big thing. And I don't think the original video had that in there. So just remember that. It's important that you always include slippage and commission. Okay. So when you look at this and you say, hey, this isn't a good strategy, the next thing I do is say, well, hey, are the results good? No, they're not. I don't think this is a good strategy just based on what I've seen, especially when you include slippage and commission. Okay. But maybe you can still make a viable strategy out of it. I don't know. But that's what strategy development's all about. It's taking ideas. And so even though this didn't work on this particular market, maybe it would work on a different market or a different bar size. Who knows? It's an idea. And thanks to the person who put that video out there, he or she gave us that idea. Now it's up to us as strategy developers to go and try it and see if it works. That's the whole key with it. So I don't want to knock on a particular person to say, oh, you gave me this bad strategy. No, they just gave an idea and they showed, hey, it worked, so now you go and verify it. That's the key. And I recommend that with any entries, exits, strategies I give on my other videos. And in fact, at some point, I'll be doing some videos of some of my older strategies that I've given on YouTube and show you, do they work still or did they break? And, sometimes I think we're going to see ones that broke. So it's not always true that videos you see that you'll get good results. But I wanted to take what that person did and see if I could make a strategy out of it. So what I did was I said, first, I want to try it on things besides the EMD. I want to try it on NQES, probably the RTY or the mini Dow YM. Try it on different things. That particular code, if you go back in the video, you'll see it had stop orders to enter. It had a stop loss to exit. You can use those. I prefer market orders. Just over the years, I've noticed a lot fewer issues with market orders as far as when you're running live with automation. And you might say, well, hey, you can get bigger losses without having a set stop in the market. That's true. But I add everything up and I say, hey, I like doing market orders better. Makes my life a little bit easier. And yeah, there might be a cost to it, but it's worth doing. So I played around with the code a little bit. One thing I did do that I normally don't like doing is I just kept where it was long only. So that strategy that I showed earlier was long only. Most strategies I develop, almost all of them, are long and short. A lot of times I like to go with the exact opposite rules for long and short. Stock indices, I'll vary on that because stocks tend to go up. But in general, I don't like long only strategies or short only. I like them to go both long and short. The theory is, or my reasoning is, hey, just because the stock market's gone up the last 5 years or 10 years or whatever it is, doesn't mean it's going to keep on going. And if you're only long and it's a prolonged bear market the next 5 years, hopefully not, but you never know, then how are you going to be able to make money with long only trades? It's going to be a lot harder. So that's what I kind of looked at. And I'm also doing it with walk forward analysis, which is something I always do with my strategies. And it's part of my strategy development process. So let's see what we get. This was, I believe this is NQ 60 minutes. And, I went back to 2007 to test this. It looks all right with walk forward. It doesn't pass my criteria, but some people might find it okay. There's some significant drawdowns here, so the risk-adjusted return isn't so good. So I would probably say, hey, this isn't a viable strategy. Some people would probably disagree. Now, that's only till the end of 2019. I also ran it through the current date, and you can see, hey, it's made money. And not a ton, but it's kind of going in the right direction. Just a lot of variability in it. There's a lot of ups and downs here. This would be hard to trade. Even if this equity curve before this point was totally straight, if you tried trading this, you're going to have some stomach problems because it's going to get queasy. It goes up, goes down, goes up, goes down, goes up, down, up, down. Now it's down. And that could be a little scary. So what's interesting here is even though it's made money the past 5 years, the path is not so great. So in a risk-adjusted return, you might not even want to trade this. Or you might. But that's what I found. My conclusion was, hey, this isn't a viable strategy. So I'm kind of sad. Hey, what are you going to do? Sometimes this happens. But the neat thing was, hey, I just took a video from the internet and the creator had the code. I was able to duplicate the code, get the same results as that person did. Then I went and did some sanity checks. Is it a good strategy or not? Turns out it's probably not that good of a strategy. And then as a final step, I made some modifications to it, which I don't show you, but I give you the general idea of what I did. Tried to make a viable strategy out of it. Sometimes I can, a lot of times I can't. And that's kind of how strategy development goes. But I hope you found this video helpful. Gave you some things to think about with slippage, commission, with optimizing, with believing what you see in a video. And the biggest thing, verify things for yourself. It's your money. You're going to be trading it. Don't rely on anyone else to say, oh, just use it. You don't have to verify it. Just believe me. No. You'll be much better off in the long run if you are able to test and verify things yourself. All right, well, thanks for watching, and look for future videos that are similar to this. Thanks.